Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Wednesday, January the 31st, 2024. Being the last day of the month, I found today's trading to be extremely interesting, particularly after the Jerome Powell's press conference. The initial reaction from the market in terms of interest rates remaining unchanged was a quick little pop followed by a drop. Then, once the press conference began, we saw a very large amount of purchasing power show up across the board in the Dow, in the NASDAQ, in the Russell, in the S&P. And then I actually was listening to the press conference, but it was getting old and he just kind of ended up repeating himself, answering questions. So I clicked that off, turned back to the market and witnessed, okay, this strong rally up, which in my mind, I'm thinking to myself, okay, great. That was the end of our wave 4, right? As I left it yesterday, wave 4. And now we're going to start a minute fifth wave, and eventually we're going to end up at new all-time highs. No, interest rates are not going to be cut. He's talking about that they haven't really ditched all that effort, that, they're still looking to make sure that inflation truly is closer, going to hang out at 2% versus et cetera, et cetera. Mentioned the PCE, but started to put this evidence together that this whole conversation about low, starting rate cuts in March was way, 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 way too premature. And then I was reading today that there are actually traders that are out there believing that not only will we start in March, but we'll have an additional 6 rate cuts by the end of 2024. I'm like, wow, okay, that's what they were trying to press in whole, or just not just press, put into the market, price into the market. I'm like, wow, that one I hadn't heard. So as this conversation started to go a little bit further in terms of, employment is robust, this is all good, this is what we're looking for, et cetera, et cetera. It's like, no, actually, Jerome, I thought you were looking for higher unemployment to balance out inflation. And I guess we're giving up on that because we think inflation is going to be under control. But it got to be very confusing and what appeared to me to be a lot of doublespeak. And so putting together what Janet Yellen, the Treasury Secretary, said a couple of days ago, that the Treasury, their borrowing needs aren't as great as what everybody thought. So they won't be borrowing as much money. And so, bam, ran the market through the roof. In fact, the NASDAQ ran to its high at 17,735, that high there. And it didn't quite break the additional high that we saw back on January the 24th at 17,793. Now, today's turn and plow lower. In the NASDAQ, I was looking at it going like, okay, well, I still have room because if I'm thinking this is 1, 2, 3, and 4 was going to come in here, then I still had room. I had room before it would be disqualified as a fourth wave of coming down to, and I even moved it up and said, okay, I'll take it down to 17,057. And so I'm thinking, okay, let me just put this in. 17,057, yeah. That, would have to break 17,057 in order to disqualify a fourth wave, to negate that fourth wave theory. Then I happened to look over at the S&P, and I'm just going to switch real quick, and I'm going to come back to the NASDAQ, but I got to tell you how I've been putting this together. This drop in the S&P annihilated what I thought was a minute fifth wave in the making. But if you remember, I had placed a minuet wave 1 at that 49.57 high that we reached yesterday. So that level started to get rejected, but I thought, okay, we can come down in a wave 2. Then I got rejected more. Then we started to rally. I'm like, okay, wave 2. Okay, you're still okay. We didn't come down and break it. We got close. And then it just let go. And the next thing I knew, the S&P's down 80 plus points. And that negated that count. And as I mentioned, in the S&P, that 49.57 high could mark the completion point for the minute fifth, the minor fifth, the intermediate C, and the primary B. Now, they're there. I put them on the chart, but I've done this before, and I don't want to be jumping like, oh, you're too early. We're not giving enough breath, enough support, or whatever it's going to take us. Oh, they're going to turn it around. It's like, that might be so. But I'm looking at what happened today and now beginning to wonder, okay, we've gone past 382. We've closed below 382. And that would be if it was a fourth wave. If there was somehow I'm going to have to put out and move this 4 over to here, then what was this? What was this massive rally courtesy of Janet Yellen? What was that move? What was this all about? Because this could not, it's just, it counts as 5. It doesn't count as ABC. It doesn't count as even an irregular. It just gets a very, and what was all of this? So it just turns into something very messy, something that just is so bizarre. And in fact, I've witnessed and traded a lot of tops in the market. I've traded, the top that we had in the 90s, which was a cycle degree, which was when the Dow went and made its own. Well, that was actually 2008, made a new high against the other markets not doing it. I traded that. It wasn't as messy as this. I traded the .com bubble bursting. The drop was dramatic, but the ride up wasn't as messy as this. So there weren't the same types of signals, but again, this is a B wave. So this is why I'm telling you, I continue to hold on to my B wave theory, because this is like B wave action. It's just like crazy. The structure doesn't match. Things just start to fall out of line. Things start to deteriorate, but yet we're still getting these pushes higher under lighter volume, under decaying internals. Now, I put that all together, and actually it was today's drop that just kind of puts me in a place where I'm like, okay, I have to at least show this. Another reason, we had major tech companies, the big boys, report yesterday. We had Google, we had Microsoft, and we had AMD, 3 major players within the tech sector. AMD within chips, within memory chips, within these gaming chips, within AI chips. So AMD's been like in favor now, being pushed higher and higher and higher. And it just died yesterday after the earnings. Google did not blow the doors off, but they didn't have a bad end of year. But still, it was, okay, great, thank you very much. And the stock dropped and then continued to drop today. Microsoft, this is the interesting thing, Microsoft ends up down $11 on the day. Now, I got to tell you, this thing started higher this morning. It started by opening up above its closing level yesterday afternoon and traded down to like 403, but remained above 400. And from at one point, somebody came in as a massive buyer in Microsoft and ran it to 414 and 415. And it closed at 397.58. And it's now offered at 96.75. That was amazing to see. Put this all into these indexes, and what's it telling me? Tomorrow, we have Apple, Amazon, and Meta. Some more Mag 7 stocks. Apple, the heaviest weighted stock in the NASDAQ and the S&P. We have Meta, that yesterday, when all of this selling started, we started to see Meta give it all up. We started to see Apple continue to give it up. Apple drops another 3 5/8 today. So I'm thinking to myself, okay, if I leave this, that this is still like maybe a 4, I can stretch this and put a 4 here in the S&P, or leave it a 4 in the NASDAQ. Can these 3 stocks that are left outside of NVIDIA, which is still, we got several weeks before NVIDIA reports, are they going to be able to pull this off and immediately reverse both the S&P and the NASDAQ and the Russell and the Dow? Are they going to be able to reverse all 4 indexes, plus all those ETFs, plus, on their earnings? And I really thought, not from what I've seen from the companies that have come before, particularly yesterday. So I'm thinking to myself, I don't know. We're at a very, very hard, strange crossroad. So I'm presenting that the S&P is done. And I could be wrong, but I'll tell you what has to happen to prove it. There cannot really be a whole lot more slipping down. Dropping 80 today was, for the S&P, that is rejection of whatever they were coming in. It was rejection of Powell. It was rejection of the Fed. It was rejection of the earnings. It was rejection across the board of a lot of things. That was it. They were done. Get me out. And that's how I take that. Now, let's just take a look. If this market is going to turn around, the first thing it needs to do is get itself back above 4,900, and it needs to do it pretty much non-stop. If we have additional decline down to 48.51, or God forbid down to 48.26, these are support levels, but only support levels is if we're going to turn and continue to go up. So we'll consider them to be continued. As that support breaks, it chips away at the chances of getting back up towards 5,000, getting back above 49.50. Those things chip away. Now, yep, I do think we should bounce. Now, if I have to really count this out, what am I going to call it? 1, 2, 1, 2, 3, 4, 5, 3. We get a 4. And if that's the case, I am going to attach from here fibs. And that's saying it doesn't go any lower than 48.66, which is where it was today. So what can we look at in a bounce? That didn't work out right. I'm sorry. Let me go back and just redo that a little bit and pull it there. That's better. Good. And pull this open. See? So if we're going to bounce, what's normal? 382, 5618. 618 tops at 4809. Okay. And between that, just a normal bounce is usually 382, 38%, 4893. So And this is really should be starting prior to the earnings. But that would, then you'd start to suspect that it's like, well, they should come in and start buying Apple. I didn't see any of that today. Not like we saw in Microsoft, where somebody come in and thought, I've got it and you don't, and I'm buying it. And they said, okay, here you go. So yes, we are kind of due for a bounce. So we have 48.76, 48.82, 48.93. Those are the levels. And this one is sitting out here as 382 of this whole move. So the validity, probably not all that strong. But I got the 8 sitting pretty much right there as well, the hourly or the 15-minute 8. Now that would be a bounce. Then if this is going to turn into 1, 2, 3, 4, we get, and then 1, 2, 3, and we get a 4, and then we get a 5 down, then I'm doing 5 down on the 15-minute chart and 5 down on the hourly chart. First sign of major rejection. 5 down. That's what I look for. If we're putting in a top, and in this one, a major top, I'm looking for 5 waves down on the hourly chart. And let me tell you, this was like, I almost said a word that I don't want to put over on YouTube because then I get complaints, but this was BS. I just like, what are they doing? Didn't it all seem corrective? And then suddenly, bam. And it just was very, very bizarre. So, yep, I think we get a little bit of a bounce, but I think that either if the bounce is going to start now, we got to get up to 48.82 to 48.93, and then we reverse and we come back down. And if that is the case, then we're looking at 48.51 for 52 down to 48.26 would be the next level. Where do we have support? Well, the previous 4 is right there, 48.73, already taken out. Okay, so where do we go from there? We're coming back down to here. That's 48.16. So you can see we had rally. We had all this rally. There aren't any price support levels. They've already been exceeded. They've already been wiped out. The next one is down here. The next one then here, and the next one then here. So we've got fibs. That's what we have. So, yep, I think we're very oversold. The MACD is looking like, whoa, it died. RSI, it's pretty oversold. Not massive, but it is oversold. So a bounce would be due just to relieve the conditions in the market. But I would suspect we're going to get additional. And that's what I'm going to be paying attention to. When I can start to count 5 ways down in the hourly, I'm going to be more convinced that this is done. Now, having said this, in the S&P, it's wreaking havoc in the NASDAQ count. So let me go over and show you the NASDAQ. Again, none of this is cast in stone yet, guys. So please, this is, as we know, all of this is a work in progress. The market isn't stopping today and say, okay, catch up and let us go on, or we'll read your stuff tonight. The market's going to continue to trade and tell me that I'm not telling the market's telling me. So based on what I saw today is why I am saying it the way I'm telling it. Tomorrow, I'm not saying that it might change the whole picture, but if those earnings come out, then we're back to what we had. Then we're okay, we're going to go up. Now, NASDAQ. I spoke about this as a possible point where we had a 5th wave failure. And all that suggests and means is that the 5th wave failed to take out the high of the 3rd wave. The high of the 3rd wave was 17,793. And this high was 17,736. So about a 57-point difference. In the larger scheme of things, negligible. In my own personal opinion, I think that's a big failure. But in NASDAQ points, not so big. So I'm going ahead and marking this. Now, the NASDAQ, had I said, left this as a 3 and kept all this in, it's A, B, and we're working a C wave down. It truly has not broken anything that would tell me like it has not crossed over this point, which is 17,057. It's not broken that level. And until it does so, wave 4 is still a possibility. But what does this now say? Because now you can see the discord, this dissonance that I'm getting between the S&P and the NASDAQ. How can I expect the NASDAQ to run to new all-time highs above 17,800 unless the S&P goes along for the ride? That the Dow finds the energy to build and make new highs. That the Russell kind of comes in and fills some of that and goes back up. And right now, that's not looking like that's going to happen. So what we really need to see here is, number one, the NASDAQ still needs to hold above 17,057. A break below that, and that's violation of the rule. And the rule is that wave 4 cannot overlap the price territory of wave 1, period. No exceptions, period. Well, except there is an exception, excuse me. The exception would be in a triangle. That ain't what's happening here. This is not a triangle pattern. So in a diagonal, all 1, 2, 3, 4, 5 are going to come in as 3 waves. And wave 4 would be expected to overlap wave 1. But it's going to diagonal. It's forming that triangle pattern. That's not the case here. So I tried to kind of futz with the count to see, okay, even if I move the 1 down to there and the 2 down to there, this is still 1 of 3, 2 of 3, 3 of 3. I'm like, nope, that didn't work. And I want to put 3 of 3 here, 4 of 3, 5 of 3, and call, and it just, that didn't work. So no matter what I attempted to do, 3 was always ending up here. So it's a failure, if indeed. Now, overnight, if they continue to drive this and it breaks that, then we know. We know. If it holds this, it's got to hold it all day tomorrow. Apple, Meta, and Amazon don't report until after the bell. So it's a lot to be holding something up, only to annihilate it. So again, we got to weigh this out. Is the market willing to hold up Apple, Amazon, and Meta to protect the integrity of a rally? Or are those companies really going to report strong enough against everything else that we've seen thus far? Are they going to be able to be the absolute shining stars, blow the doors off? Not from what we've seen in Apple lately. It's gotten 2 downgrades prior to it running back up to 198. It's already got some, not that it's a bad company, because it is not. So please don't misunderstand me. Neither is Amazon, Meta, but neither is Meta. All have product, all have cash, all have good prospects. What we're talking about is how you're going to survive the next whatever, this period. If we go into a period of devaluation, a period of readjusting, a period of, we've reached too high, we need to come down, we need to correct, those markets, those companies are going to correct along with everything else. Nobody gets to stand out stellar or go like, well, that one's just not going to go down, including NVIDIA. It doesn't mean that it's bad. It doesn't mean that it doesn't have good prospects. It just means we, Mr. and Mrs. Market, have bought too much and paid too much in advance of what this company may or may not do. So I still believe very strongly in artificial intelligence and all of the advantages and what is it going to do around the world. I believe very heavily in artificial intelligence. There are stocks that I think that just you throw into your portfolio and you sit out and you wait. They're cheap enough. They're not, et cetera, et cetera. But here in the NASDAQ, I put some last support levels on. If this really starts to break down here within this fifth wave, what I'm labeling as a fifth wave, this thing could be in really serious trouble. If this is only 1 of 5 and this is a little 2 of 5, oh my, what happens? I connected 1 to 4, so to get my estimates for wave 5, and immediately I found out, oh, okay, it got to 3.618, so wave 5 is already 3.618 of wave 1 at 17,229, and it went through it and came back. What's up next? 4.236, where wave 5 would be 4.236 times the length of wave 1 at 17,186. Yeah, I can continue to throw fibs out there, but they become a little bit unruly. So either this changes or we're in serious trouble. This was that rally I talked about. They just bought it up and then like somebody rang a bell and it just went bang, bang. It was amazing. I thought, okay, here's the bottom of the 4. A or 1, 2, we're off. I thought, okay, you're just going to keep on going. Powell's talking. Everybody's, okay. It didn't. It just kind of died and then it died. It changes the picture, folks. It changes how I want to look at it. So what can I say initially? I already have put some fibs up there, and I'm going to go all the way out to my daily before we can see. These are, if I'm putting a B there, these are some initial ones where primary wave C would be equal to primary wave A at 11,453. Now, granted, we got up a lot higher, so we're not looking for sub 10,000 anymore. No, there's the ticket. And guess what? The fact that we went up 2 new all-time highs in the irregular B wave, it sits within the ABC, quote unquote, flat department. It's not a zigzag, it's a flat. So we'd be looking for wave C to come back accordingly, 11,297. That's the bottom of wave A on the basis of that March 2024 contract. This is basis the previous contract, which is 10,004. I got to get right to it. 10,000. Oh, give me the low. 531, but I think it's actually a little bit lower than that. So, but here we are, and we're in 100% flat. So yeah, it's going to look ugly when we're sitting up at 17,265. We're talking about 6,000 points, but guess what it did, folks? This is October of 2022. It went up 6,000 points in a year and 4 months. So in a year and 4 months, can it come down that much? Well, you know what the old saying is, things go down faster than they go up. So, okay, so can it come down in 10 months? Can it come down that much? Yeah, it can. Are there catalysts out there to do it? Yeah, there are. Got a lot of stuff going on. So we'll see. We definitely will see, folks. We definitely will see. Again, I'm not convinced or convicting the market that tops are in, but the market has really now, it's on a cusp that proof needs to be seen. Proof needs to be seen. This is where I'm going to leave it. Now, tomorrow, pre-market, it doesn't. It just keeps coming. We have initial jobless claims, U.S. productivity. We have the S&P manufacturing PMI, the final. We have ISM manufacturing. We have construction spending. And then throughout the session, we have U.S. auto sales. for January. Yeah. So we're kicking off with a bucket load that could drive the market lower all before we get any earnings. So, and then we have pre-market earnings, and those, yeah, they have pre-market, but most of those are going to affect the broader market, not so much our big Mag 7 stocks. And then on Friday, we get more payroll numbers and the unemployment rate and factory orders. So there's a lot. There's a lot to finish the week and maybe even put us into the pit or rise us up out of the ashes. This is where I'm going to leave it right now. Again, please, I'm going to just repeat myself. Tomorrow, after the close, Apple, Amazon, and Meta. Have a great evening, everybody. Next update will be on Thursday, February the 1st.